Hello friends, in the series on the income tax cases, today we will discuss the case of Principal Commissioner of Income Tax versus LTEC SGS Private Limited. This case has been reported in 457 ITR at page number 733 and the date of the judgment is 1st August 2023. In this case, the amount of goodwill was created out of the merger or amalgamation, you can say, which has arisen in the books of accounts because the payment to the shareholders of the company from whom the assets were acquired was more than the value of the assets acquired. This is the general principle of accounting, and as per the accounting standard also, that when the amount of the liabilities and the amount of the share capital is more than the assets acquired, then the difference is debited to the goodwill. And there is explanation 3 to section 32 subsection 1, which says that the goodwill out of the merger is an intangible asset which fell in the ambit of explanation 3 to section 32 subsection 1 and is eligible to depreciation. In this case, when the assessment was going on, the learned assessing officer was of the opinion that the assessee is not entitled to depreciation on this amount of goodwill. So the assessing officer disallowed the amount of the depreciation while computing the income of the assessee. The assessee challenged the order of the learned assessing officer before the CIT appeal, and the CIT appeal was of the opinion that when the payment made to the shareholders of the transferor company is more than the value of the assets acquired, then the difference is goodwill, and this goodwill is an intangible asset and assessee is entitled to depreciation on that. Against the order of the CIT appeal, the department chooses to move to the ITAT, and the ITAT also upheld the order of the learned CIT appeal. When the matter came before the Delhi High Court, the Delhi High Court said that the scheme was approved by the High Court, which was in the form of merger or amalgamation, and it was clear from the books that the payment was made to the shareholders of the transferor company and it was more than the assets acquired. So the goodwill has arisen in the books of accounts of the assessee, and this goodwill is out of the merger which has been approved by the High Court, is an intangible asset which fell in the ambit of explanation 3 to section 32 subsection 1. So the assessee is entitled to depreciation on this intangible asset in the form of goodwill. The Delhi High Court also followed the judgment of Honorable Supreme Court in the case of CIT versus Smiths Securities Limited 2012, which was reported in 348 ITR at page number 302, and that case was decided by the Supreme Court. So friends, the conclusion of this judgment is that whenever there is a goodwill which is arising in the books of the transferee company for the payments made to the shareholders being more than the assets acquired, then this is an intangible asset and eligible for depreciation at the rates which are prescribed in the Act. This case is very important because in this case the decision of the Supreme Court has also been followed, and now it is crystalline clear that whenever there is goodwill in the books because of the amalgamation or the merger, then this is an intangible asset and it is entitled for the depreciation. At the end of this video, once again, I am repeating the name of the case. The name of the case is Principal Commissioner of Income Tax versus LTEC SGS Private Limited, and this case has been reported in 457 ITR at page number 733, and the date of the judgment is 1st August 2023. Thank you, friends.